Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 14th of November. Starting off with the FTSE 100, which remains under the levels that we would like it to be. It's under the 200-day line. It's under the floor of that rising trend channel from this time last year. So basically 8100 and 8140 respectively. We've also got a line of broken line of support there from back in May at 8065. So we at least need an end of day close back above that to get us out of a rather precarious looking situation, which gives the impression that this market needs to test the August support there at 79.15, and presumably that will happen sometime during the next couple of weeks. Moving along to the DAX, and the situation here has been rather better than that at the FTSE, possibly because of the slightly different economic situations and government situations in either place. But we did gap down earlier in the week. We bounced off the floor of that rising trend channel from this time last year around 18,900, and above that looking to break that October resistance line there at 19,500 to give us a route up to the top of the channel there at 20,600, perhaps by the end of the year. Could still have a test of the floor of, or the 200-day moving average there at 18,300. With the RSI at neutral 50, though, it may be that we just have to track sideways for a little bit longer. Moving on to the Dow, which has been the star of the show, obviously with the Trump situation going well. Here we've got the market still toying with the top of that rising trend channel from last year, but that was the previous target there. We hit that back at the latter part of last month, and now we've got that at 43,800 as a new support for this market. Can't rule out a test of the top of the gap there, 42,800, or even the 50-day line, but at the moment the market actually finding support at the highest levels, and we've got a chance of hitting that August resistance line projection at 45,000 sometime later this month. Moving on to the star of the show by quite some margin, and it is Bitcoin. Here you can see that we're just trying to break out of this second bull flag there. The first one was around 75,000, finding support at the old record highs there from March, and the second one here based around the 85,000 level. Now above the 85,000 level, looking for 100,000 rather, hopefully by the end of the year or even sooner. I think that in terms of the breakout that we've had, it's at least 9 out of 10 in terms of the strength that we have seen so far. The worst case scenario is that we have to break down to retest the old resistance at 75,000, but at the moment it looks as though the market holding up pretty well at the best levels. Moving on to gold, where the rug has been well and truly pulled, and in fact here you can see that we've broken that line of the uptrend line there from February. That was around 26.10. Below that, we've got the risk of 25.60.70 before this market turns around. The RSI is still not oversold, so it's at 33. So that does mean that there's possibly a day or two of further downside for this market. And I suppose it looks as though in the battle between Bitcoin and gold as a store of value at the moment, the battle is being won by Bitcoin by quite some margin. Still trying to work out exactly where the floor of that channel is there. I suppose it's actually already broken there, but we'll get back to that over the next day or two. Moving on to the stocks, and here you can see a stock which I haven't covered for ages, largely because it hasn't been doing very much, but Advanced is next, and here you can see we've got a rising trend channel that's been in place since the beginning of the year. We've gapped up through basically post-September resistance around £1.41. Above that, at the top of the latest gap, looking for £1.70, perhaps by the end of next month. Nice RSI consolidation above neutral 50. We've bounced off neutral 50. We did that before the breakout, and we found support above neutral 50, so that does suggest things are warming up here. The other aspect to note, I suppose, if you look closely, is the way that the 50 and 200-day lines are both rising now. The 50-day line just starting to rise, and that suggests we're into a golden cross, moving into a golden cross, and that tends to be the strongest part of the cycle, which it is already being. At this stage, only well below the floor of the channel there, £1.25, scuppering the idea of a big move to the upside. Moving on to Corcel, and here we've been hoping for quite some time that we'll maintain the latest recovery. What's good here is that we found support at that old August peak there around 0.19, 0.18 and hit that broadening triangle target that we had at 0.21. Above 0.21 though, we could have a new leg to the upside as high as 0.4 pence by the end of the year, and that looks as though it could be on tap given the way that the 50-day line is rising, and also we've had an RSI rebound above neutral 50, which tends to be a leading indicator on the upside. On to stock which has done rather well over the recent past. Not surprisingly, it did very well with all the other crypto rallies that we had, and we were looking for 3.8 pence on Coinsilium. So far we managed to get up to 3.75, but now that line is up to as high as 3.9 pence. Hopefully we'll get that sometime later this month if Bitcoin keeps the dream alive. In terms of support, the old peak there from February, 3.25 pence, above 3.25, looking for the 4 pence zone. We're in the run up to a golden cross as well, so that tends to be the strongest part of the cycle and is being so at the moment. Next up is stock which looks as though it's a coiled spring in terms of rising. We've had unfilled gap to the upside above a rising 50-day line. We've had support above the neutral 50 level, and just waiting for the shares to break out of the recent range, breaking through 11.1 pence and the 200-day line, and we could be heading up to as high as 22 pence by the end of the year. It's a punchy call, but it's a punchy chart as well at the moment, and that RSI configuration above neutral 50 looking quite encouraging. On to Deltic, and here we've got a company which is actually doing stuff in the North Sea, which is very, very impressive. It deserves a medal of some kind, I think. And here we've also got a rising trend channel base, and that has the top of the channel there is heading up to as high as 9 pence, which we're looking for hopefully by the end of next month, maybe a bit sooner than that. And the unfilled gap to the upside off the low tends to be a decent signal, as is the uptrend line in the RSI window as well. So rather against the odds and against the net zero situation that we have at the moment, Deltic seems to be ready to recover. Onto a stock which has already recovered and celebrating a golden cross today between the 50 and 200-day lines. Initial target here at Anar Aqua was supposed to be 55 pence, so we're not far off that. If we can break through 55 pence on an end of day or end of week close basis, then we're looking for 72 pence by the end of the year. Ideally, we stay above recent support around 49 pence. The next contender is Codal, and here it's been a bit of a consolidation that we've had over the recent past. In fact, the rug was pulled at the beginning of the month, but an unfilled gap to the upside off the low looks encouraging, and at least while we're on the right side of the gap floor there at 0.31, looking for the shares to at least head back to 0.45, especially after today's rather more encouraging update. Next up is Polarian, and here you can see that one of those potential recovery situations, nice bounce off a falling 50-day line, which tends to be a strong signal. Want to see the shares break through 1.65 pence. If they can do that, it could be 2 pence by the end of this month. But the RSI rebound at neutral 50 also help there, and that gives us the impression that we're a V-shaped, or what I call a V-shaped bull flag there in operation. I've covered quantum blockchain quite a lot in the recent past, and you can see why. We've had solid candles since the 8th of this month, and looking for further consolidation above the 200-day moving average at 0.86, above the previous target, or the latest target there at 1.04, looking for the shares to hit as high as 1.8 pence by the end of this year. The other point to note is whether the 200-day line will start rising. At the moment it's flat, but it looks like it's ready to rise, hopefully by the end of this week or early next week. Another stock which I've covered quite a lot here is Seascape, and here we've had a bull flag breakout. Looks like a mid-move consolidation breakout there through the 39 pence level, and that leaves us looking for the next level up, which is as high as 63 pence. Maybe we get that by the end of this year, helped along by the recent golden cross between the 50 and 200-day moving averages. But the key here is staying above 39 pence as much as possible. Haven't looked at Tlou for a long time, and you'll see from the chart perhaps why that is. But Looks like we've got a bear trap island reversal, so gapping down last month and gapping up now off fresh lows. The view at this stage is that above the initial November resistance at 0.67, looking for the bottom of the gap there, 0.95, maybe by the end of this month. That's a punchy call, but it may happen. Finishing off with TAP, which for once in its life has actually exceeded expectations and done it much more quickly than we might have imagined. We were looking for 1.75 pence, perhaps by the end of this month. It's happened obviously by the end of this week. And the next level up is a March 2023 resistance line projection at 4 pence, and hopefully we could get that by the end of this month, or at least by the end of the year. Ideally, we stay on the right side of the old target there at 1.75 pence, but good to see that share finally turning around. That's it from me today. More updates tomorrow.